Imagine walking into a grocery store and seeing milk priced at $2 on the shelf. But when you get to the register, the cashier says, "Actually, it's $10, and we only have a few gallons left." You would feel like the whole system is lying to your face. That is exactly what is happening right now with silver. The price you see on your trading app, flashing across financial news networks, that says silver is hovering near $23 or $24 an ounce, that price is a lie. It is a carefully manufactured illusion, and while the digital numbers dance around on a screen, something extraordinary is happening in the real world. Welcome back to Shadow Wealth, where we peel back the layers of deception to find what the elite don't want you to see. Before we tear apart this lie, hit that like button, smash subscribe, and turn on the notification bell. Because this video will expose why the physical silver market is screaming something completely different than the paper price. Stick with me for the next 90 minutes because by the end, you will never look at a silver chart the same way again. Let us start with the most dangerous lie in modern finance, the lie that price equals value. In a free and fair market, price and value dance together. But the silver market hasn't been free or fair for over 4 decades. Most people look at the spot price on Kitco or their brokerage app and think, okay, silver is $23 an ounce today. Then they call their local coin shop or check online bullion dealers, and the price for a physical 1-ounce silver coin is $30, $32, sometimes even $35, and they get confused. They think the dealer is just marking up the price to make a profit. But that is not what is happening. What is happening is the physical market and the paper market have divorced. They are living in separate houses, and the marriage is over. The spot price, the so-called silver price, you see everywhere. That is the price of a paper derivative contract. It is an IOU. It is a promise to deliver silver at some point in the future, most likely a promise that will never be kept. The physical price, the price you actually pay to hold a bar or a coin in your hand, that is the real price. And right now, the real price is telling a story of massive scarcity, surging demand, and a financial system cracking under its own weight. To understand how we got here, we have to go back to the early 1970s, when silver was real money. Back then, the price you saw was the price you paid. But then the big banks and commodity exchanges, led by the COMEX in New York, created something called paper silver. Essentially, they allowed traders to buy and sell contracts that represented silver without ever taking delivery. This was fine at first, like a coat check ticket. You hand over your coat, you get a ticket, you come back, you get your coat. But what happened was the coat check started selling 10 tickets for every 1 coat they actually had in the back room. They got greedy. Today, the ratio of paper-silver contracts to physical ounces of silver is estimated to be anywhere from 250 to 1 to as high as 500 to 1. That means for every 1 physical ounce of silver sitting in a COMEX vault, there are 500 claims on that same ounce. Think about the implications of that. If even just half of 1% of those paper holders said, "I don't want your paper contract, I want my silver," the entire system would collapse overnight. That is not speculation, that is math. And the banks know it, the insiders know it. That is why you are seeing a quiet but relentless move by wealthy individuals, hedge funds, and even some central banks to take physical possession of silver. Now let me take you inside the physical market because this is where the story gets truly explosive. For the last 2 years, the United States Mint has been struggling to keep up with demand for American silver eagles. These are the most popular silver coins in the world. In a normal year, the Mint produces around 15 to 20 million of these coins. But demand has been so intense that they have sold out their annual production runs months in advance. Dealers are paying premiums of 40 to 50% over the spot price just to get their hands on them. Let me say that again. 40 to 50% premiums. If the spot price is $24, you are paying $36 for a coin. Why would anyone pay that unless they knew something the spot price wasn't telling them? And it is not just coins. 1,000-ounce bars, the standard for institutional investors, are becoming impossible to find. Major refineries like the Royal Canadian Mint, Johnson Matthey, and Asahi are reporting backlogs of 6 to 8 months. If you order a large bar today, you might not see it until next year. Meanwhile, the silver leasing rates have gone parabolic. Normally, leasing silver is cheap and boring. But recently, lease rates spiked to levels not seen since the Hunt brothers crisis in 1980. That is a signal that industrial users, the factories that need silver for solar panels, electric vehicles, medical devices, and electronics, are terrified. They are paying huge fees to borrow silver because they know if they don't lock in physical supply now, they won't be able to produce their products later. The semiconductor industry alone consumes over 10% of the world's annual silver production. And with the AI boom driving demand for chips through the roof, that percentage is climbing fast. But here is where the conspiracy becomes undeniable. Every single time the physical market starts to tighten, every time premiums rise, every time lease rates spike, something magical happens on the COMEX. A massive seller appears. 4 or 5 banks working in coordination dump hundreds of millions of dollars worth of paper silver contracts all at once. The price crashes by 5, 10, sometimes 15% in a single day. And just like that, the fear subsides. People look at the chart, see the lower price, and think, oh, never mind, silver is cheap again. But they don't realize they are being played. This is not a free market. This is a managed market. It has been managed by the same banks that have been fined billions of dollars for manipulating precious metals prices. In 2020, JPMorgan Chase pleaded guilty to spoofing, a form of market manipulation where traders place fake orders to trick the market. They paid a fine of over $900 million. But did the manipulation stop? Of course not. Because the incentives are too large. If silver ever broke out to its real fair value, let us be conservative and say $50 an ounce, the amount of paper derivatives that would go bust would be in the trillions of dollars. It would take down major banks, pension funds, and brokerage houses. So the powers that be, the shadow wealth of the world if you will, they have a vested interest in keeping silver cheap on paper for as long as possible. Let me tell you about a man named Andrew Maguire. He is a former gold trader who blew the whistle on the silver manipulation back in 2008. He testified in secret to the CFTC, the Commodity Futures Trading Commission, and provided recorded phone calls and emails proving that big banks were colluding to cap silver prices. Decades later, nothing has changed. In fact, it has gotten worse. Now they have algorithmic trading programs that can spoof the market thousands of times per second. They have deep liquidity from central bank swap lines, and they have the media on their side. Have you ever noticed how every time silver has a good week, CNBC, Bloomberg, and Reuters run stories about how silver is risky, or volatile, or not a safe haven? But when silver drops $5 in an hour, there is total silence. That is not journalism. That is a campaign to keep retail investors scared and on the sidelines. Meanwhile, the insiders are stacking. The biggest silver stackers are not the guys on Reddit. They are the ultra-wealthy family offices in Zurich, the sovereign wealth funds of oil-rich nations, and the Chinese. Yes, China. For the last 3 years, China has been importing more silver than any country in history. They are not buying paper futures. They are buying physical bars. They are loading them onto ships and taking them to Shanghai. Their goal is simple. They want to own the physical metal before the West realizes what is happening. And when the West does realize, and they will, it will be too late. The silver will be gone. I want to walk you through a scenario. It is not a doomsday scenario. It is actually very simple. Imagine interest rates start to fall later this year or next year. The Federal Reserve has signaled they are done raising rates. When rates fall, the dollar weakens. A weaker dollar is historically very bullish for silver. At the same time, the industrial demand for silver is exploding. We talked about solar panels. Each solar panel uses about 20 grams of silver. Solar installations are expected to grow by 40% this year alone. That is hundreds of millions of ounces of demand. Then add electric vehicles, which use about 50% more silver than gas-powered cars. Then add 5G networks, which are silver-intensive. Then add AI data centers, which need massive amounts of silver for their processors and connections. This is not a speculative bubble. This is fundamental hard industrial demand. But here is the kicker. Silver mining production has been flat for a decade. There are no new giant silver mines being discovered. The ones that exist are getting older, and the ore grades are falling. So you have demand rising at double-digit percentages every year, and supply that is literally shrinking. In a normal commodity market, prices would have already exploded. The only reason silver is not at $100 right now is the paper manipulation, and like a dam holding back a flood, the cracks are starting to show. Let me take you back to March of 2020. The COVID crash. Everything sold off: stocks, bonds, gold, and silver. The paper price of silver fell to $12 an ounce. But what happened in the physical market? The mints closed, the refineries shut down, and dealers could not get any inventory. The physical premium on silver coins went from 5% to 80% overnight. That was a dress rehearsal. That was the system testing to see what would happen in a real crisis. And what happened was the paper price crashed, but the physical price, the price you actually had to pay, skyrocketed. The disconnect was so massive that the COMEX had to change their rules. They allowed delivery against futures contracts to be settled in cash instead of metal because they knew they did not have the silver. They still don't. Fast forward to today, and the situation is even more precarious. The registered inventory on the COMEX, that is the silver that is actually available for immediate delivery, has fallen to its lowest level in decades. At the same time, open interest, the number of outstanding futures contracts, is near all-time highs. That means there are more people demanding silver than there is silver to give them. This is the definition of a short squeeze waiting to happen. And when it happens, it will not be like GameStop or AMC. Those were meme stocks with no underlying value. This is silver. It is an industrial commodity that the world literally cannot function without. The squeeze could make the Hunt brothers look like a garage sale. Now you might be asking, why should I care? I am not a silver stacker. I am just an average person trying to protect my savings. Here is why you should care. Every major currency in the world, the dollar, the euro, the yen, the pound, is being debased. They are printing trillions of new units out of thin air every year. Your purchasing power is being stolen from you slowly so you don't notice. A dollar today buys what 80 cents bought 5 years ago. That is not an accident. That is the design of a fiat currency system that has no anchor. Silver and gold are the anchors. They have been money for 5,000 years. They are the only assets that are nobody else's liability. When you hold a silver coin, you do not need a bank, a government, or a counterparty to tell you it has value. It has value because it has always had value. And right now, you can buy that historical, proven, safe haven asset at a price that is artificially suppressed by banksters and algorithms. That is the opportunity of a generation. But you have to be smart about it. Do not buy paper silver. Do not buy an ETF like SLV. That is just another IOU. If you do not hold it, you do not own it. Buy physical bars and coins from reputable dealers. Store them in a safe place. And be patient. The manipulation cannot last forever. Every day the physical market gets tighter. Every day more people wake up to the lie. And every day the dam gets a little closer to breaking. Let me share some inside information with you from the wholesale market. I speak with bullion dealers and vault operators regularly. Off the record, they are telling me stories that would make your jaw drop. One dealer told me recently that a single family office in Asia purchased over 2 million ounces of physical silver in a single week. They didn't haggle over price. They didn't care about premiums. They just wanted the metal. Another source told me that a major European bank has been quietly accepting delivery of silver bars from the COMEX and shipping them directly to private vaults in Switzerland. These are not small amounts. We are talking about hundreds of tons. And for every ton that leaves the COMEX vaults, that is one less ton available for the paper market. The drain is accelerating. I am not speculating. I am reading the vault reports. The numbers are public if you know where to look. The COMEX silver inventories have declined by over 50% in the last 2 years. Think about that. 50% of the silver that was available to settle futures contracts is gone. And where did it go? It went into the hands of people who will never sell it. It went into the hands of people who understand that the paper price is a lie and the physical price is the truth. Now I want to address the skeptics. There are always people who say, if silver is such a great deal, why isn't it higher? That is the same argument people made in 1999 when gold was $250 an ounce. They said gold is dead. It is a barbarous relic. Then gold went to $1,900 over the next 12 years. Markets can stay irrational longer than you can stay solvent. But that does not mean you should ignore the fundamentals. The fundamentals are screaming. Inflation is stickier than the Fed wants to admit. Real estate is crashing in commercial sectors. The stock market is being held up by 7 giant tech companies that are trading at dot-com bubble valuations. Bonds are yielding barely above inflation after taxes. Where else can you put your money? Real assets. That is the answer. And silver is the most undervalued real asset on the planet. On a historical basis, the gold-to-silver ratio is currently around 85-1. That means 1 ounce of gold buys 85 ounces of silver. The historical average is closer to 16-1. For the ratio to return to the mean, silver would have to quadruple in price relative to gold, or gold would have to crash, which is unlikely. Simple math says silver is massively undervalued. If gold stays flat and the ratio just goes to 40-1, silver is over $50 an ounce. That is a double. If the ratio goes to 20-1, which it has many times in history, silver is over $100 an ounce. That is a 4-bagger from current levels. And if the paper market ever breaks and the manipulation ends, well, do not let me put a number on it. Just know that the upside is historic. But let me be very clear about something. The goal here at Shadow Wealth is not to pump a coin or sell you a dream. The goal is to wake you up. The financial system is not designed to make you wealthy. It is designed to extract your labor and funnel it upward. That is the truth they do not want you to hear. Silver is not a get-rich-quick scheme. It is a get-honest-slow scheme. It is a way to preserve the purchasing power of your hard-earned savings while the central banks do everything in their power to destroy it. The reason I am so passionate about this topic is because I have seen what happens to families who ignore these signals. The middle class is being erased. The gap between the haves and the have-nots is wider than ever. And the only way to cross that gap is to own assets that cannot be printed into oblivion. Silver is one of those assets. It is the poor man's gold, but it is also the smart man's hedge. It is the everyman's insurance policy against a system that has lost its mind. And right now, the insurance is on sale. But not for long. I want to take you through the timeline of what I think will happen over the next 12 to 18 months. This is not financial advice. It is simply connecting the dots. First, the Fed will pivot from rate hikes to rate cuts. They have no choice. The national debt is over $34 trillion. Interest payments alone are over $1 trillion a year. They cannot afford high rates. As soon as they pivot, the dollar will weaken and commodities will rally. That is the trigger. Second, as prices start to rise, the industrial users who have been living hand-to-mouth on inventory will panic buy. They have been using just-in-time inventory for decades. That system breaks when supply chains are fragile. They will start building strategic stockpiles, which will pull even more silver out of the vaults. Third, the retail FOMO will kick in. When silver breaks above $30, the news will finally cover it. The same news that ignored it at $20 will call it a bull market at $35. And that will bring in a wave of new buyers. Fourth, and this is the wild card, a major bank or brokerage will fail because of their short silver positions. The exchange had to cancel trades and halt trading for weeks. The same thing will happen with silver, but on a much larger scale. And when that happens, the price discovery will shift entirely to the physical market. And that is when you will see premiums of 100, 200, maybe 500%. The paper price will become irrelevant because no one will accept paper delivery anymore. They will want the metal, and the metal will be in the hands of the people who prepared. I need to pause here and address the most common objection I hear. People say, I can't afford to buy silver, it's too expensive. But here is the beautiful thing. Silver is actually the most affordable monetary metal in the world. You can buy a 1-ounce coin for around $30. That is less than dinner for 2 at a chain restaurant. You can buy a 10-ounce bar for around $300. That is a car payment. You can start with $5 or $10 a week. You do not have to be a whale. You just have to be consistent. The goal is not to become the biggest stacker. The goal is to be a stacker at all. To have some honest money in your possession when the digital world goes sideways. If you are listening to this, you are already ahead of 99% of people who will never question the system. Do not let the perfect be the enemy of the good. Buy what you can, when you can, and do not tell anyone what you have. OPSEC, operational security, is everything. Loose lips sink ships, and in this case, loose lips attract unwanted attention. Keep your stack private and keep it safe. Let me circle back to the global picture because the context is crucial. The BRICS nations, Brazil, Russia, India, China, and South Africa, plus new members like Saudi Arabia and Iran. They are actively de-dollarizing. They are setting up a new gold-backed trading system. But here is what the mainstream media misses. Silver is also part of that conversation. In many cultures, especially in India and China, silver is considered just as important as gold for savings. The new BRICS currency, when announced, will likely have a basket of commodities backing it, and silver will be in that basket. That means central banks, not just individuals, will start accumulating silver as a reserve asset. That has never happened before in modern history. Central banks have always bought gold, but if they start buying silver, the market will be turned upside down. The annual silver market is only about 1 billion ounces. Total central bank reserves globally are in the trillions of dollars. If they allocate even 1% of those reserves to silver, that is tens of billions of dollars chasing a market. That produces only about $25 billion worth of metal per year. The math is explosive, and the signs are already there. China is stockpiling silver. India just lowered its import taxes on silver to encourage more buying. Russia is ramping up its silver production for domestic use. The pieces are moving. The question is whether you will move with them or be left behind. Now, I want to talk about the tactics the manipulators will use to try to shake you out. They will slam the price. They will create flash crashes on low volume hours like Sunday night or Friday afternoon. They will put out negative news stories. They will call silver a zombie metal or a relic. They will try to scare you into selling. This is classic price suppression. Do not fall for it. The only way they win is if you lose your nerve. Understand that every flash crash is a gift. It is a chance to buy more physical metal at a discount. The big players know this. When the price drops $2 in 10 minutes, the insiders are not panicking. They are buying. They are calling their brokers and saying, "Fill my order at the market." You should do the same, but in the physical market. When the spot price dumps, that is when premiums on physical sometimes soften for a brief moment. That is your window. That is how you beat them at their own game. You use their manipulation to your advantage. You buy the dips, and you hold. You do not trade silver. You do not try to time the top. You accumulate and you wait. The longer the manipulation continues, the more violently the eventual breakout will be. Every month they cap the price, they are just loading a bigger spring. I have been following this market for over a decade. I have seen the patterns repeat. And I can tell you with high confidence that the next 12 to 24 months will be the most important period for silver in your lifetime. We are at the inflection point. The physical market is already in a deficit. That means more silver is being consumed than is being mined. That deficit has persisted for 3 years running. In any other commodity, that would mean higher prices. But silver is unique because of the massive paper overhang. The paper market is acting like a pressure release valve. But that valve is rusting. Soon it will fail, and when it fails, all the pressure will release at once. That is not a prediction of a bull market. That is a statement of physical reality. The silver is leaving the vaults. The industrial demand is insatiable. The monetary demand is rising, and the paper promises are multiplying. It is the perfect storm. It is the trade of the decade. And it is happening right in front of us while most people are distracted by sports, celebrity gossip, and the next Netflix series. Before we wrap up this long-form journey, I want to leave you with a final thought about legacy. Why do we build wealth? It is not for the sake of numbers on a screen. It is for freedom. It is to protect our families. It is to have options when the world turns chaotic. Silver is not just a metal. It is a tool of sovereignty. Every ounce you own is an ounce of your labor that cannot be inflated away. It is an ounce of protection against a banking holiday, a currency devaluation, or a market crash. The people who survived the Weimar hyperinflation in Germany were not the ones with cash in the bank. They were the ones with real assets. They were the ones with silver and gold, with land and tools. We are not heading for Weimar. History never repeats exactly. But it rhymes, and the rhymes right now are getting louder. The debt levels, The money printing, the asset bubbles, the social unrest. It all rhymes with the past. And the past tells us that real money wins in the end. Not digital entries, not derivatives, not promises. Real, physical, tangible money. That is silver. So here is my call to action for everyone watching this video on shadow wealth. Do not just be a viewer, be a participant. Share this video with one person you care about. Just one. Send it to a family member, a friend, a coworker. Start the conversation. Ask them, what do you think happens when the paper game breaks? Plant the seed, because the more people who understand this dynamic, the more stable the transition will be. Also, drop a comment below. Tell me how much physical silver you have stacked. Even if it is one coin, be proud of it. Or if you are just getting started, ask a question. I read every comment. Engagement is what builds this community. And finally, if you haven't already, go back and watch some of our older videos on the history of silver manipulation. There is a playlist called The Truth About Money that will connect all the dots. We have covered the JPMorgan trial, the 1980 Hunts blow-up, and the February 2021 short squeeze attempt. All of that history is prologue to this moment. You have spent 90 minutes with me today. Thank you. That tells me you are serious. You are not a tourist. You are a student of the game. The system is lying to you. The silver price is lying to you. But now you know the truth. The physical market tells a different story. It tells a story of scarcity, of awakening, and of opportunity. The question is not whether silver will revalue. The question is whether you will act before the rest of the world wakes up. The early bird gets the worm, but the second mouse gets the cheese. Do not be second. Be ready. Stack real. Stay free. And I will see you in the next video.